If you worked overtime, your whole overtime check is not suddenly tax-free. The new federal deduction is real, but the headline is much broader than the actual rule. In plain English, I will show you what part can qualify, use a simple $20 an hour example, explain which overtime may not count, and show you what to look for on your tax forms. My name is Mitch Caldwell, your modern day tax CPA, and I am a licensed CPA here in California. This is general tax education, not individualized tax, legal, accounting, or financial advice. Overtime eligibility and state tax treatment depend on your facts. The short answer is this. For tax years 2025 through 2028, eligible taxpayers can claim a federal income tax deduction for qualified overtime compensation. In the common time and a half situation, the qualified amount is generally the extra half, not all of the pay for those overtime hours. It is a deduction claimed on your tax return. It does not remove the wages from your W-2, and it does not erase Social Security and Medicare tax. If you want tax headlines translated into rules you can actually use, subscribe to Modern Day Tax CPA. Suppose your regular rate is $20 per hour. You work 5 hours of overtime and receive time and a half, or $30 per hour. Your total pay for those 5 overtime hours is $150. Break that into 2 pieces. $100 is your regular $20 rate for 5 hours. The remaining $50 is the extra halftime premium. Assuming the overtime is required under the Fair Labor Standards Act and you meet the other rules, that $50 premium is the potentially qualified overtime compensation. The full $150 is not. And a $50 deduction does not mean $50 back. If that deduction reduces income otherwise taxed at 22%, the federal income tax savings would be roughly $11 before considering other limitations or tax return interactions. The key phrase is overtime required under Section 7 of the Fair Labor Standards Act, or FLSA. The worker generally must be covered by the law and non-exempt from its overtime requirement. The familiar case is an overtime eligible employee receiving at least time and a half after working more than 40 hours in a work week. Not every payment labeled overtime automatically qualifies. Extra pay created only by a company policy, a union agreement, state rule, weekend shift, or holiday schedule needs a closer look to determine whether and to what extent it also satisfies the federal FLSA rule. If a worker is exempt from the FLSA overtime requirement, extra pay provided under another arrangement does not become qualified overtime compensation merely because the pay stub calls it overtime. Double time is another trap. If federal law requires only time and a half, but an employer pays double time, the IRS says the qualified piece is still limited to the FLSA required premium. The extra amount above that is not automatically deductible. When the answer is unclear, ask payroll how the amount was classified and check the Department of Labor guidance or obtain qualified help. This is an eligibility question before it is a math question. The maximum annual deduction is $12,500 per return or $25,000 on a joint return. The deduction begins to phase out when modified adjusted gross income exceeds $150,000 or $300,000 for joint filers. The person receiving the qualified overtime must have a Social Security number valid for employment. If you are married, you must file a joint return to claim the deduction. You can claim it whether you take the standard deduction or itemize. The deduction is calculated on Schedule 1A and then flows into the individual income tax return. This is a federal deduction. State treatment can differ, so do not assume your state return gives you the same result. Now, despite the slogan, overtime compensation is generally still subject to federal income tax withholding, Social Security tax, and Medicare tax when it is paid. The benefit is calculated later as an income tax deduction. Your paycheck can therefore show tax withheld, even when part of the overtime may produce a deduction on your return. Whether that creates a larger refund depends on the rest of the return and how much tax was already paid. A deduction is not a guaranteed refund. For overtime earned in 2026, employers are required to separately report qualified overtime compensation. On a 2026 Form W-2, the IRS says to look in box 12 for code TT. The IRS also created separate fields on certain Forms 1099, but seeing overtime on a 1099 can raise worker classification questions. The label on a form does not decide whether you were properly treated as an employee or whether the overtime qualifies. Do not wait until filing season to care about the number. Save pay stubs, year-to-date payroll summaries, and any employer statement identifying the qualified FLSA overtime premium. When the W-2 arrives for 2026, compare code TT with your records. If the amount looks wrong, ask the employer about it before filing instead of inventing a correction yourself. Tax year 2025 was a transition year. Employers generally were not required to report qualified overtime separately on the 2025 W-2 or certain 1099 forms. The IRS provided calculation methods in Notice 2025-69 and the Schedule 1A instructions. Depending on how a pay stub described overtime, the qualified amount might be shown directly or might need to be separated from total overtime pay. If you already filed a 2025 return and now believe qualified overtime was missed, first verify FLSA eligibility, the calculation, the deduction limits, and the records. Do not amend a return based only on a social media estimate. Now for some common mistakes. Mistake 1 is treating the full overtime payment as deductible instead of isolating the federally required premium. Mistake 2 is assuming every type of extra pay qualifies because the employer used the word overtime. Mistake 3 is calling the wages tax-free even though payroll taxes still apply and the federal benefit is an income tax deduction. Mistake 4 is ignoring the income limits, filing status rules, or differences on the state return. The plain English answer is that no tax on overtime does not mean no tax on the entire overtime check. For a typical eligible time and a half worker, the potentially deductible part is generally the extra halftime premium. Confirm that the overtime is FLSA qualified. Save the payroll records and look for code TT in box 12 of the 2026 W-2. Then watch my W-2 versus 1099 guide because the form you receive changes the tax workflow, but the form alone does not determine the legal working relationship.